Okay, welcome back to Investor Success. We're going to unpack a really interesting client acquisition. So the scope was quite specific on this one. Needed to be in a growth location. So we ticked that box in Bendigo. Suburb of Kangaroo Flat, not going to give you much more than that. What the specific scope was, we wanted to be close to amenities. So we wanted to be close to the train. We wanted access to the highway to get into the capital cities. We wanted subdivision potential. So what we've been able to do here is identify a block on 934 square metres in Kangaroo Flat. Existing house on it. This subdivision isn't in place just yet. We've got a shed at the back and we've got a studio at the back. So the long-term plan will be for this client, or maybe even medium term, is going to be to subdivide this block off, keep the existing house and create a battle axe block at the back, or a hammerhead, some call it. So that's going to cost around $40,000 to $60,000 for that renovation. That subdivision. It doesn't require renovation. And we had all this evaluated by our consultant prior to this acquisition. So we knew exactly where the services were located. We understood the overlays. We understood the setbacks to ensure that this was a developable block that was going to profit for this actual client. So let's unpack what we paid for it in this situation.
So what we managed to do was negotiate this deal to $402,500. Now, this was a multiple offer situation and it really did come down to the wire at the end. Now, what was important about this property was that this dwelling here had been partially renovated. So that was what was going to increase the rent up to the $425 per week. Now, this was really important to this investor. As much as the research that our planning consultant along with our team had done, what was really important was also the yield. So the fact that the dwelling had been partially renovated supported this higher rent for the area at the time. But we look at it 6 months down the track. Mark, tell me what this property would be worth now.
$450,000 every day of the week. Particularly with the scope of adding value, $450,000, that uplift in that period of time. Now, there was an offer on this property higher than ours, but the agent sold it very well to the actual vendor because we were certain with our finance. They didn't know the other party that was slightly higher in price, so it could have delayed the actual outcome. So we were also very certain because we look at this, the rental appraisals we received on behalf of the client for that property was $380 to $400 a week. We were certain, knowing the vacancy rates in the area, we would get at least 420. Now that's always a challenge for the investor to grasp and say, well, hang on, but the appraisal's $380 to $400. How are you certain about that? Long story short, what we're able to do is secure a $425 per week outcome, increasing the yield, but now look at the value uplift. So this is an investor that already owns an inner city apartment that's now vacant, can't get a tenant, hasn't grown in value, is negatively geared. Looking at this type of approach and this type of strategy where you're close to the train, access to the cities, has subdivision potential, don't need to spend any money on it now, can save for the strategy implementation of subdivision anywhere between $40,000 to $60,000, already getting a great rental year with positive cash flow. What's the cash flow on this one roughly?
Around $50 per week, I believe.
$50 to $60 a week. Net cash flow after all costs. Loan, rates, water insurance, property management, blah, blah, blah. We've got 50 to 60 cash going into that pocket. Equity, quite significant in such a short period of time of only 6 months. Knowing the markets, knowing the demand, and knowing for certain what's going to be achieved. Hope you've seen value in that because there's significant upside and benefits for this investor. Bring one to you soon.